Welcome to a new episode of Market Briefing for Accountants. I'm Richard Williams, the Senior Partnerships Manager at Alaka. I'm very honoured to be joined by Sophie Hossack, who is Head of Partnerships today. Welcome, Sophie.
It's great to be here.
So just a few weeks ago, we saw the first decrease by the Bank of England after a very long period of high interest rates. And today, Sophie and I will be talking about the effects of the savings landscape and how accountants can proactively add value to their clients in this current environment. So thanks for joining us today, Sophie.
It's great to be here.
So I guess the first question is, what's the landscape been like over the last couple of years for savings and businesses?
Yeah, so if we roll back a couple of decades and start there, depending on how long you've been in business will depend on how much you've felt this or experienced the change in interest rates. So around 2009, around the GFC and just before that, the base rate suddenly dropped really, really significantly. So for decades before that period of time, business owners were used to putting money aside in savings accounts and earning quite considerable amounts of money. And we were as consumers as well. It was quite a typical, usual thing to be able to do, put money aside and expect to earn interest on that. And then, come 2009, it suddenly dropped so significantly that actually we got out of the habit very quickly about how do we use our cash in our bank accounts appropriately. And that low base rate lasted, for years, really 12, 13, 14 years. And only in 2022, in that September, did it start to increase again. And then it jumped up quite quickly. So for the last couple of years, we've had a base rate that's been relatively high in comparison to the low one, but not in comparison to the 10% of like the 90s.
Sure.
But there's been a change that we almost weren't, as consumers and as businesses, expecting or prepared for changing our behaviour. So we haven't been used to putting money aside, and we haven't been expecting to earn money on that cash surplus.
Yeah, wonderful. No, thank you. So I guess that leads us on to the next little bit is what can accountants do for their clients in this high interest environment?
Yeah, I think the first thing is that accountants, depending on your type of services that you've got with your clients, you may be having business review meetings on a monthly basis if you're offering, really detailed, in-depth, almost virtual FD style roles for those clients. Or it may be on a quarterly or indeed a yearly basis, but doing a review over the bank accounts, business banking, what your clients are actually experiencing. Because if you know that they are sitting on a lot of cash, even if it's a relatively seemingly small amount, actually making that work harder in this environment is really key.
Yeah.
And there's a moment in time where that can happen. And for a lot of, not for all, but for a lot of businesses after COVID, they saw an increase in the amount of cash they had sitting in their bank account. So for a lot of business on average, it's about 30% more cash out of COVID than going into COVID. And again, are we used to making that earn money for us? No. And so accountants, it's really key. It's a very good first conversation to have. It's a very proactive, very helpful, very supportive conversation to say to your clients, we could do something about this. You could choose to have a different bank account or choose the type of termed account that you're looking at, because there are obviously different types. It could be a fixed term account, it could be an instant access savings account, but just not leaving it in the current account, doing nothing, I think is the key thing to kind of get across.
Yeah, absolutely. Brilliant. And what's the main tips that you would give to accountants right now?
Yeah. One is helping them to help their clients understand how they would use that extra money.
Yeah.
So one of our accountants helped his client to move over to Alaka, to our business rewards account. That client was then using the interest earned to actually offer his employees PMI, so private medical insurance. So he hadn't been able to offer that benefit before, or seemingly hadn't felt he could, but actually with interest that he was now earning, he was then putting that money towards that type of a benefit. So helping clients vision and see how they would use that money is a really good way of helping them actually to make that change and to implement something new within the business. Otherwise, it's human nature to kind of leave it on the to-do list and not actually action something. But if you can help them visualize, okay, well, what would you do with this extra money? How would you make it go further for your business? What impact would that have? Actually, also, how much does it accrue over time?
Yeah.
So what does the impact of compound interest have over time, and what does the larger number look like? Is another good tip to have as well.
That's brilliant. No, that's really good. Are there any other good stories, any good examples we can share?
I think the other good things to think about and the other good examples are looking at, I mentioned a moment ago, the type of term account that you have.
Sure.
But also looking at, if you're suggesting clients review their banking, looking at some of the nuances and details of the bank and what they offer. You know, does the bank have a banking license?
Yeah.
Are they under the FSCS guarantee? Do they have a minimum amount or a maximum amount that you can put into a savings account? Again, there are lots of little nuances that you might want to look at before suggesting clients take a look at the best market opportunity for them. One of the things that we've been championing at Alaka now for about a year is this big savings squeeze. So this idea that actually we believe very, very passionately that SMEs should be receiving a higher interest rate. So it's something like £273 billion is sitting in a current account at the moment across the UK, which is just a staggering amount of money.
Yeah, massive.
And last year we did a report that said that that group of businesses were then missing out on earning 7.5 billion in interest that could have been making money for them. That's actually increased by another billion this year. So now it's 8.6 billion that SMEs are missing out on. So I think being aware of the impact at a macro level as well is really important, and what can we do to help support business owners be aware of that, encourage banks to show and to demonstrate what are the 3 top interest rates in the market is really important. So we've been doing a lot of work at Alaka about that.
Brilliant, and thank you very much, Sophie. That was fantastic. And thank you all for watching. Looking forward to seeing you on the next episode.